good. All right. So just a little bit introduction of myself. Let's do this. So this is who I am, look like, that's me. Our firm is a CPA accounting firm. We're a registered tax agent. I myself is also a chartered accountant, which means that if you need to certify a true copy, I can do that too. A statutory declaration, I can do that too. I'm also a licensed financial planner specialized in superannuation. I have more than 10 years experience in the like industry. So this is who I am. So these are the topics, looks a lot, handpicked by Katie. She assumed this will be interesting. Let's hope so. So we try to cover a little bit of everything that some of the points might be interest to you. But if not, don't worry, because this is basically just an introduction, and I won't go too much boring stuff, and I won't spend too much time. The entire thing from the beginning 10 minutes ago until the end I finished talking, it's only half hour. So the first question is about what are the essentials to start a new business from an accountant's point of view. So what I think, there are several things you do need to hold tight onto. First is vision and strategy. One idea is not enough. One niche market is definitely, I guess, necessary but not enough. What you need to have for the first is a vision and strategy. You need to be able to see where you are. You need to know what tactics you want to use to battle in the battlefield. So that is very essential. Without it, idea, just idea. Next is focus and dedication. It's like your own child you give birth to. You're gonna focus on this thing. You can't be distracted. Okay, I just do part-time. I just see how it goes. I'm not confident, so I'll just do a little bit. That will never work. For a business, you need to be putting in a lot more. Focus on that. Don't get distracted, and dedicate for that. You are responsible for it. Take the big pride of it. The last one, passion, luck, and work. That's a combination of your self-emotional side, your self-rational side, and something you can't really control. I would say luck play a very, very big role of a new, even a continued business. If the luck is not on your side, probably not a good timing. Probably try another time. All right, so that's very important. Next question, what's the superannuation? Sounds getting interesting, all right? Get interesting there. All right, so it is one of the 3 resources when you retire. So when think about now, we are so young, we're passionate, we're full of energy, with energy boost, flipping around. Yes, but what about when you're 60, 70? What to do then? What to do then? Right? In this country, basically, in the retirement scheme, we have 3 resources of financial wise, right? One is superannuation. One is government pension. Government will give us something, hopefully that's happening, still continually 30 years later. And personal savings. So superannuation is one of the financial support after you retire. Superannuation is a long-term, by itself is a long-term investment which grows over time. Right? Your superannuation fund invests and manages the money for you until you retire. For most people, super begins when you start working and your employer start to pay a percentage of your salary into your fund for you. You can also contribute to it, and sometimes government contributed to your super too. And that's to save for the only purpose to get you support when you retire. What does a financial planner say will be a little bit different? They put some color onto it, make it more interesting. They say it is a tax vehicle. You can use it now. Doesn't mean that You get money from your fund because you can only get money from the fund when you retire. But doesn't mean that you shouldn't have it because it is a tax vehicle. I say it loud. It's nothing to hide. It's not dodgy. It is a tax vehicle. In your super fund, taxable income charge, flat rate, 15%. Your personal income is different story. Can be as high as half of your income go to taxation office. So that is why it is a very effective tax vehicle to park your money, not to pay tax as a debt money to someone else. How can I effectively manage tax deductions? Tax deductions, yeah. What does it mean if I can manage my tax deduction better? It means that I get more tax. Nobody follow me. I get more tax. Nobody follow me. Okay. I get more tax refund. Okay. I get more tax back from ATO when I lodge my tax return. Isn't that better? Sounds better? Yeah. People really want to know. Everybody is interested to know what you can claim. It's always the same question. Every year, everybody, not even my client, whoever, if they know as soon as they know that I'm a tax agent, they will ask me the same question. What I can claim? I just don't feel I claimed enough, right? So what you can claim? 2 or 3 rules. Very simple. 1, if you spend the money, that expense is to help you generate your taxable income. I don't know if I give a good example for that, if I can try. Say, I buy a remote control of presentation. That is tax deductible because I use it for track you and then get some income. It's too brutal, too straight, okay? And then, sorry, that is related to help me for generating my taxable income, so that's tax deductible, right? My watch, no. It is still good presentation, but without it, I can still generate my taxable income. It's personal. It's not tax deductible. Right? So sometimes, if you don't know, you definitely need to ask your tax agent. Don't make the decision yourself. Second principle, you need to spend the money out of your own pocket and have the receipt or records. Give you a bad example is my client. She's working very hard. She used her husband's car for work. It should have been tax deductible. However, even the fuel, when she pays the fuel, the card is in her husband's name. So nothing she can claim. Her husband neither, because he didn't use his card for his own taxable income. So they missed out that one. Oh, but it's still nice, right? As a lady, you still want that to happen. Yeah. Okay. So that's important. Hopefully I answered effectively. Yeah? How often do I need to review my business performance? It is not a question about yes or no. You must review your business performance. Normally, traditionally, I'm talking about maybe 10 years ago, at least once a year with your tax accountant. When you do the financial report, when you lodge your tax return, that's when you review your business, which means not enough. Definitely not enough. Not often enough, and it's too late. When you need something to happen effectively, that's not the way to go. Depends on the size of your business and the growth and your vision. The review frequency is different. At least, no matter how small your business is, at least quarterly. Minimum quarterly. Even if you generate just 1 sale a month, you still need to monitor it. If you can, review your business performance as frequent as possible. Get some professional involved. If you have a staff working for you who has some accounting background, get him involved. If you have accountants working for you, get them involved because they will point out what is the important point or area you need to focus on because the data is just like a sea. Everything is out there. it's too much time draining and too much scattered around. You don't know what to look for. What is important information for you? So you better get some specialists involved to know what to look at. Even for one or two areas, you don't even need to look at the whole picture if you don't have time. Just look at some key figures, key records. That's important. Which accounting software should I choose? So the topic is about, the question is accounting software. But I know there are so many softwares these days. We go paperless. We don't have any records on the paper anymore. We scan it and then destroy the physical thing, right? And that's what we do. And we go so effortless these days. We don't have to have a big suitcase carrying around as the old days. So what is helping us are those cutting-edge software in the cloud. So you use pretty much everything, rely on the apps, application, and software. Back to my topic is about accounting software, which means that your tax agent or your accountant or yourself want to see the business performance. In that sense, do a year-end report or regular management report. That is the software you're gonna see. You're gonna ask what's accounting software. So in this box, I list them, some examples. Have you heard of Xero? You must have heard of Xero. MyC, QuickBooks, Excel, even Excel. People use Excel these days, right? For whoever doesn't go paperless, well, you need to change, right? Full stop, you need to change. So those are the software people basically know. My firm highly recommended Xero. From small to big, it can cover pretty much everybody's needs. For the small to medium size of the business. Medium size, people ask me, what is medium size? If the turnover is under $10 million, you are not big business. So that will cover you, right? Even some big business use Xero. It can integrate other functions and other apps too. The rest of them, you must have heard of them too. They need to be able to link to your accounting software in some extent. Because what I see accounting software is a centralized of data. You need to see it as the frame. So you put things into this frame. That's how accounting software is important, playing this such an essential role in any business. You can't ignore it. You can't just say, I pick whatever, cheaper. No, they know the same. So what you're looking for when you're getting accounting software, several things. Just feature what your business needs. Can your accounting software provide it? I want to invoice. Can my accounting software do the invoice for me? I want to do payroll. I want to send my staff payslip. Can it do it for me? I want to pay the super for my employees. Can it do it for me? So that's important. I want to generate the bill. I want to monitor when I make the payment. If my customer pay me on time, can this software do it for me? So that's important. And second, people always forget, always neglect is the software provider's vision and plan. What they promote, what they are going to do in the next 5 to 10 years is very important. I don't want to say too much because I don't know if there's any relationship with MyC, but I did have very bad experience with MyC. They should have some function. I believe they have it. They're such an international big company, right? When I ring them for support, they said we have that feature many years ago, but for whatever legal reason, we don't want to release it. Make too late. I switch. I can't bear your cost of your inside structure value reason that could be useful for your customer, but you decide not to provide it. That's their value, not in line with my vision, so no. So next one is the interaction. If your software is just by itself, I don't think it's suitable for current trading situation. This software needs to be able to open to other apps. And you can use it on your mobile phone, you can use it on your laptop, you can also use it on your app. Right? Apple products, not Apple products, whatever it is, it shouldn't have barrier. So that is what you want to look for. A software can integrate and open. You won't be able to just use one software. That's why it's important for whatever you are using can work together for you, generate that intrinsic extra value. Right? And lastly, very important, is the trial support. It should have the trial period for you. A good software never worry about, okay, if you don't pay me, I'm losing something. So I don't provide any trial for free for you to see. No. Good software will be very confident. Even though they may not have their 100% delivered, they still be brave enough and then tell you, we want to help you, you try it. If it is not for you, no problem. No question asked. That's still okay. So that's important. And the support, turnover time for your question to be answered. It's important. We can't waste time. We can't afford for an answered question and don't know where to go. Customers waiting there for paying money to you, and you can't really waste, oh, can you pay it and say 2 weeks later? No, it can't happen. So your software must be supportive for you. They should be able to support you in any time with a very short turnover. Any question you can ask me?
Since you mentioned like SMSF,
yes.
What's your opinion on rather than just leaving it in a super fund,
okay,
versus doing it in parking it in property or something like an ETF, like an exchange traded fund? Do you have any thoughts?
Any thought? Okay. It is very subjective. Is it working? All right. I have to say, the opinion, even for all the financial planners, they have individually different opinion, right? And the question is a general question. The answer is a general answer. You ask the same question from him and you're thinking differently, I give the same answer, it may be a wrong advice to you. So be aware what I'm answering next. It's not specifically for you, okay? To have a self-managed superannuation is not cheap, right? You are looking at least about $3,000 for admin, including accounting, reporting, this and that. So you need to make it reasonable. Why don't I just keep my funds in all the banks, in all the retail funds? My funds, to be honest, with Austrian Super. I can do it for myself. I'm not, right? First, if you want to do something with your money in the super fund that retail fund cannot do, that's important. No second thought. I have to move it out. If I want to buy this building there, out there, look at that building, look beautiful, I want to buy that, I'm rich, my super fund has like $1 trillion there. Well, your industry super can never do that for you. You're gonna take it out. Right. Second, if you have enough money to transfer it out, at current implication, not compulsory, 500,000 is the minimum balance for you to make it viable. Transfer the money out of your retail super to your self-managed super. If you don't have that money, more than that, you can still. It's not illegal, but not much benefit. Put it that way, not much benefit. And what else is possibly you really hate it. You really hate how the retail super, industrial super treat you. You call them, they never answer you. You call them again, they probably say something very rude. You switch your super, move to another super fund, they do the same. You had enough. You are smart. You can manage your money. I don't mind to pay that little bit extra admin. I just want to have my management and control. That money is my hard-earned money. I don't want to I just totally have no confidence to put my money into these people's hands. That's okay too. That's okay too. Multiple other reasons, too much to talk about. investment-wise, if you want to invest in property, share, EFT, those kind of things, every investment has risk. Even cash investment has risk. So nobody can guarantee you. What all these investment specialists do is see the historical figure and do some analysis. And you will sign a disclaimer say that investment risk, nobody else carry that risk for me. I'm gonna bear it. I know what I'm doing. You are required to sign that. So that is very unpredictable. Risk means something that you can't really predict. So you don't know. But I think we're trying our best. The investment managers trying their best to see the historical figure, to use their knowledge of economics to try to predict what's going to happen. Depend on your long-term goal, short-term goal, medium-term goal. If you want to take the money in the next 1 year, the investment is different. Some investment going to be long-term to see the value. But if you want, I don't want to take the money out 20 years later, okay, the portfolio is different. The products you choose is different. Depend really, really closely related to your personal scenario. Lastly, but not least, is your subject. If you are a risk taker, sure, you can be provided or advised by more options, right? But if you're not comfortable with medium risk, well, forget about the shares. You're not gonna get it. You will not be able to sleep at night, right? So that's very important. Did I answer your question?
Yeah, no, it's good. Very
cool. Wonderful. Any other question?
A good question.
Okay.
Now that there are a lot of new investors entering the market with, crypto or even just traditional shares, what are some of the most common tax pitfalls that new investors make when it comes to the tax if they're starting to put their toes in the stock market or crypto or anything like that?
I need to reword your question. I'm not sure if I understand your question. Does it mean that you want to know the interaction between the tax and the investment activities?
Yeah.
Right. It's complex.
Okay.
It's complex. Depends on your structure. What kind of investment under what entity? It's very different, and it will be very different if the investment is under your name, or you and your spouse name, or your family trust name, or company's name, or superannuation name. The tax result will be very different. And of course, after that, it's getting technical. Getting technical. If it is capital, if it is trading, right? So it sounds a bit boring from here now onwards. Do you really want to know?
No, it's good to know it's more complex.
Yeah, it's more complex. So I do highly advise you to keep close touch with your accountant, because once you make a decision, it's costly to change. It's always expensive to change. May as well make the right decision from the start, and then you know what you're going to do. Then later, most of the time you can't fix it. So be careful.
Right.
Ask me first. That's simple. We are friends. Yeah. So for the short, so that's pretty much it. It's a thank you, but also letting people know that I'm just sitting there for just a short question. If I can answer short, I don't charge you. Don't worry. My chargeable rate is not low, but doesn't mean that friendships should always come with a price in dollar value. Okay? And hopefully you enjoy and get something, right? And enjoy food, and then we can say hello in the future more often. Okay? Thank you.